Hi there everyone and welcome to this video. I hope that you all safe wherever you are watching this from and that you're keeping warm. Winter's definitely arrived and it's hitting pretty hard. I think that's an understatement. Hopefully your studies are going well. From what I've seen, a lot of marks have been released and yeah, it seems that you guys have done pretty well. I think the marks are looking very positive. So that's something that should give you guys a bit of motivation and encouragement. Just don't let that be something that makes you take your foot off the gas. That's a common mistake which a lot of students do unfortunately make, and that's something you wanna avoid. This is your time to really bulk up that year mark and to really focus on the nitty-gritties that normally bog you down. So use this to your full advantage. It's a very good opportunity that you have to actually get a very good year mark or DP, and that's something that always works in your favor. It's good for confidence. It's good for when you're actually looking at what you need in the exam. It takes a bit of pressure off. You know how the exams are, especially if you've repeated this. You're pretty much scraping every mark that you can get. And yeah, well, okay, maybe that's a bit too extreme to say, maybe not scraping every mark, but by the time you're done with that exam, you're not even sure where you've scored your marks or not sometimes, and any little bit that you can get helps. So the less you need to chase, the better. Right. So anyway, this is not going to be a very long video. This is just going to be an introduction to management accounting. So we've already started our management accounting videos. If my voice is a bit scratchy or stuffy, please forgive me. I do have a bit of a flu at the moment, so yeah, it's been one of those weeks, fortunately. But yeah, if there is any problems with the quality, or if you can't hear me very well, please type a comment, and then I'll redo the video and hopefully it'll sound a lot better. Okay, cool. Now without further ado, I think you guys always know that I like the quotation. Don't wish you were easier, wish that you were better. So by now you've seen this 100 times, and it's something that really I like to hammer in, right? So this is quite appropriate when you're looking at your marks now, because without a doubt, a lot of you wrote test 2, and I was there in the WhatsApp group seeing how people were complaining, and yeah, people weren't happy about it, and you look at the marks and bam, all of a sudden it's like you guys nailed it, so clearly the test didn't just become easier because you were complaining about it, but clearly the way you actually answered and your level of knowledge is a lot higher than what you gave yourself credit for. So do you see the power of this, right? The course didn't suddenly get easier. In fact, this whole online thing I would assume is a bit of a difficult transition to make, because it's not something that many of us have experience in. So for you guys to be getting the marks that you are getting, I think that's something you should really be proud of. And it shows that you are improving and you are getting better as you go along with the course, which is what you want to see. You want to see that improvement. Now, this is just going to be an introductory video, right? So before we can actually get into management accounting, it's necessary to actually understand what management accounting is, and these are just a few of the specific outcomes which you should achieve once we've worked through this lecture, once we've worked through these slides. It's not very difficult, but this is fundamental knowledge. This is core knowledge. It's not something you need to swat off. It's just things that you need to understand. I've always felt that you cannot study something if you don't understand what it is that you are studying and why you are studying it. You're not going to absorb it, because at the back of your mind, subconsciously, you're resisting it. But when you actually understand what this topic is, you might not understand the content yet, but you understand what the topic is, where it fits in, why is it important, then it sort of, puts things into perspective for you, and it makes it easier to actually understand this and to actually go forth and, have a more effective approach to this. Okay, so go through these things, make sure that you are able to achieve each of these specific outcomes. Like I said, you don't have to swat anything off, but it's just about understanding. Okay, so looking at our first slide, right? what is management accounting? So we know what financial accounting is. We've heard about it over and over again, and that's pretty much the more common or the discipline that gets most of the attention, if I can phrase it that way. So what is management accounting then? Okay. So management accounting is simply the process that combines accounting, finance, and management needed to drive the successful management and operation of the business or the businesses. Right. So that's a nice definition and a very textbooky type of answer, but all you need to really know is that management accounting focuses on combining several different aspects relating to the business to ensure that the business is run effectively and successfully. Okay, so these different factors will include your accounting side, because obviously that's where you're going to measure your financial performance and your financial your results and your position, etc. But what about your internal structures? You know, your pricing, your product costing, your decision making, all of these things, that forms part of your management accounting, because all of these are going to drive the success of the business. Okay, if you have a business, I mean, if you're going to make a decision on whether you should continue a product or even launch a product or not, you're not really going to have an IFRS that's going to talk to that, right? So this is a management accounting type of thing where you actually have your management account to look at that, and you'll decide, well, okay, we've got product A, do we want to manufacture it? Don't we want to manufacture it? If we do want to manufacture it, you know, how many units are we looking at manufacturing? You know, which regions do you want to supply? You know, that type of thing. So that is what management accounting is looking at. It's looking at actually managing the business and seeing from the business's point of view, you know, what is going to drive its success? What is going to get that business to be profitable and sustainable as well? I think sustainability doesn't really get touched on enough, but sustainability is another key concept which you simply cannot overlook at all. Okay. So the differences between management accounting and financial accounting, right? Obviously, it goes without saying that there are differences, and we're not going to thumbsuck any. We're going to get straight into it. So these are not all of them, right? I've just listed a few of the topical ones and the more important ones, in my opinion. However, I would recommend that you guys go through your textbooks and even do some research on this. Please go on Google. It's not a waste of your time. It's not a waste of your data or your effort. Trust me, it's well worth your time to actually understand the differences between these two. Right, so if you look at financial accounting, the timing of financial accounting is more focused on reporting on what has happened in the past. So you know that it's historical financial information or historic financial information, right? You've heard that term before. And if you haven't, well, you heard it now, but that's the term that you will come across, right? So financial statements don't tell you what's going to happen in the future. You know, they're reporting on what has happened in the past. Management accounting, however, is looking at past as well as your future information. So it's looking at your past information, like you're looking at your costing, what your products have costed, etc., etc. But you also look at future information where you can be looking at your projections. For example, if you're doing a capital budget or something like that, and you're looking at future information to see, well, you know, what type of costs and revenues do you anticipate earning as an organization, you know, and using this in your decision making. Okay, legal requirements. You would know that there's a statutory requirement for public companies to produce their apps. With management accounting, there's no such requirements, right? So this is just the, you know, it's an internal set of accounts or information, and there's no real requirements or restriction to produce these. The only thing is that the cost versus benefit principle is quite prevalent here, because you can go to town and have a lot of different management accounts, but you need to see whether it's necessary. So that's something that management need to look at. That if you're going to be going too analytical, are we actually just driving up our costs for this for no reason, and we're not really getting any valuable information out of it? Okay, and then the accounting requirements, pretty much with financial accounting, you know, it's either gonna be an IFRS or GRAP or GAAP, etc. Right? So there is a financial reporting framework. With management accounting, there isn't such a framework. Okay, so that's something which is very important. So a common example of this is where you'll see on when it comes to inventory, you cannot use LIFO for financial accounting purposes, but for management accounting purposes, you actually can. Okay, so that's just an example. Okay, now the various different elements that are involved in the decision making, planning and control process. Okay, so when you are sitting as the financial manager, right, you would be facing a lot of different decisions which you need to make on a daily basis, right? And these are not done haphazardly, right? You will actually go through a step-by-step process, and this is the process that has actually been outlined. So for the first part of this whole thing is identifying the objectives that will guide the business. So you are actually looking at what you are trying to achieve. Okay. The second step is to actually search for what courses of actions you can take to achieve these objectives. Okay. Now, once you've gotten that range of possible courses of action or options, you need to select the most appropriate one, because obviously every single one is not going to be appropriate for you. Okay, some might be too costly, some might not tie in with what the vision or mission of your organization is. So for example, if you want to go green, for example, it wouldn't really make sense for you to go and chop a forest down to open up a factory, because you want to increase your production, that type of thing, right? Implementing the decisions as part of the planning and budgeting process. I think that's pretty self-explanatory, to be honest, but basically you need to carry it out, and this is obviously typically the hardest part, because a lot of companies, depending on the experience level of the staff, they make mistakes when it comes to this. Okay, where carrying out these courses of action is not done as effectively or is not done as planned, and that's when problems start arising. Okay, then comparing your actual and planned outcomes, well, that is just more like a control measure. Okay, so it's just budgeted versus actual, that type of thing. And then responding to divergencies. Okay, so obviously once you've seen that you've got a variance, so even if you look at standard costing, for example, you've got a variance, you don't just leave it and accept it. You look at what's caused it, what do we need to do to rectify this, and so forth and so on. Obviously you'd be looking at rectifying it if it's something that is adverse to you, but if it's a result that's better than achieved, or better than what you expected rather, then you'd be looking at how can you keep this as sustainable, like how do you make sure that you can continue. Okay, so the functions of a cost and management accounting system, pretty straightforward, and I don't think we really need to focus too much on this. The main thing from you, I would say, is that you need to understand that it provides relevant information to help managers make better decisions, and that's where it really comes down. Okay, so obviously, yeah, it's to determine the cost of your products. That is very, the area that a lot of emphasis gets thrown on, but the relevant information part is something which you guys need to really get stuck in your heads, right? Because it's not just about getting information there. Okay, and the last one is providing information for planning, control, and performance measurements. Even here, I would say relevant information, because all information is not relevant. So if you're going to use irrelevant information to make a decision, it's actually not useful. But we'll discuss that later on in later videos. Okay, and the key success factors that determine customer satisfaction. Pretty much these are on 4 things. This is not something you get examined on in a hurry, but it's just good to know. So you're looking at your cost efficiency, quality, time, innovation, and continuous improvements. If you look at cell phones or anything like that, you would want a cell phone that's not too expensive. So for example, yeah, even if the brand is good, you still want something that's value for money. At the same time, you're going to want something that is quality, right? You're not going to want something that is, flimsy and that's going to break in your hands. Okay. Time is just also looking at the life cycle of this product, as well as, how quickly new products are released. You don't want this cell phone to get obsolete too quickly, but at the same time, you as a company don't want to be giving something with the lifespan that is a bit too long. So if you look at cars, you'll notice some of the more expensive cars, like an S-Class, will have a much longer lifespan or product lifespan than what the C-Class would have. And that's not to say that the S-Class is both better, that's why, or, that may or may not be, but if you're looking at spending 3 million rand on a car compared to 600,000 rand, would you not want your money or your investment in the asset to actually have a longer life cycle if you are spending more money? I think you would. And then the last one is your innovation and continuous improvements.